Hello and welcome back to the channel. This one we're talking about my favorite trading indicator, and that's the 20 moving average. So let's jump into it. As always, make sure you subscribe to the channel. I really do appreciate it. I do lots of trading content, mainly evergreen content, of course, which you can come back to and revisit on your trading journey. So the reason I use the 20 moving average is very simply to manage trades and protect me from the bigger than necessary losses. It's very simple. It's just basically if you enter a trade, so for me, I'm typically a breakout trader. If we get this momentum, as you can see on the screen here, Tesla is just about to start kind of breaking out. And the 20 moving average on the screen is the orange line flowing through there nicely. And you'll see that throughout this video. I've got 3 examples that we're going to have a look at today. And yes, it's basically there to protect our capital and just to really get the most out of our trade. So there's one thing straight off the bat. It must be, if you are looking at trading to the upside at least, it must be below the current price action essentially. So you've got here, if we zoom in a touch, we have the orange line obviously below the candles, as we can see, which is obviously much better. If we have the line above here, then it acts as resistance, and we don't want that when we enter a trade. We want as much confluence as possible, and that is actually my second point. Confluence. So if we can get other moving averages on the screen, which I'll do that now, I'll just touch on this lightly, of course. So we've got the 50 and the 200, which is also acting as confluence. As you can see, the 50 is flowing in there just below the current price action, and of course we've had two recent bounces off of the 200 moving average for Tesla, but we go back and take them off because we're talking about the 20 moving average in this particular video. So there's many confluence points as you can get. I like to have at least 3. Coupled with volume, RSI, all that kind of stuff. You can add that. Maybe I'll do a video on confluence. I'm not too sure I've done one of those. That would be quite a good idea. Anyway, moving back to the video, the 20 moving average is going to be our support zone throughout the trade. And what we're going to be talking about is essentially moving up the stop loss behind the price action using the 20 moving average. And it's going to look a lot like this. So we've got the current price action trades upwards. You know, it's quite choppy. It doesn't go straight up, of course, but hypothetically, that's what we want. I'll change it to white to obviously make it, look good towards the candles. And then we'll draw another line, which is going to be the 20 moving average, which is going to be flowing up behind it, probably something like that. And we'll change that to the color of the moving average. So straight off the bat, we've got the price action coming here and the 20 moving average following up nicely behind here. So the ideal entry to this trade is, of course, after the break. So probably somewhere around about here. And we've got obviously a target price, I think about 420, at least that's what I've got on my charts, and a stop loss, which obviously you should be setting a stop loss straight off the bat. The beginning of every trade, a stop loss is very, very necessary. And of course we've got here, it starts off around 293. So as this trade matures, the stock kind of comes up nicely. We bring up the stop loss behind the 20 moving average. Unfortunately, you can't bring it up any higher using this graphic, but we'll just draw a line here. And we'll color it red for the purpose of the video. This is the stop loss, and you're just dragging it up behind the 20 moving average. So eventually, when the stock does come back down like this, it will come back down and touch the 20 moving average in the line. Again, I'll color so many different colors here. It will come back down, and it will trigger that, and then we'll have the stop loss will be just underneath the 20 moving average, and it will probably come down and trigger. That's the end of the trade, but you still would have made from entry 10%, which is nothing to grumble at, especially from a swing trading point of view. So that's one example. We'll move on to the next one quickly. And this is one I'm actually in at the moment. We've got Bitcoin kind of breaking out of this downward trend line here. And of course, if we do get momentum kind of going to the upside, let's have a look. So theoretically, it does kind of come up to here for Bitcoin. And then the 20 moving average will come up nicely behind it, of course, because that's just kind of how it flows. You can see it in the screen here. We'll just color that orange, and then we'll just bring up our stop loss. So much mouse action today. We'll just bring up our stop loss, and you can see it kind of stops there, and then we'll add a line on the screen to represent the stop loss. It will come up just behind the 20 moving average as the days flow on. So you will need to keep on top of this probably every day or two. I mean, you can do every 3 or 4 days, depending on what your horizon is on the trade. If you're looking for a trade for 3 or 4 weeks, then obviously take your time and bring it up slowly. But if you're looking for like a 1 week or 2 week trade, then you will need to bring it up probably at least every day or two. So that's another quick example here. And we've got another one as well, the last example we're going to talk through today, and that's Google. Bit of a strange wedge that I've kind of drawn, but it is applicable. We've had all-time highs, we've met all of the points here, but we have the 20 moving average obviously flowing up nicely behind. If we do get the price action continuing in this direction, maybe we get a little bit of a pullback like that. It'll be a bit choppy. Of course, this is not a perfect line, and I don't expect this to happen exactly, but it's for the purpose of this video. And of course, the moving average will kind of come up nicely behind it like that, you know, thereabouts. And of course, we'll have a position. We'll probably wait for this to come back down and retest the trend line, because that's kind of where my thoughts are around my strategy. I do have my strategy kind of noted quite a lot on X. So if you don't follow me on there, then of course do go ahead and do so. So you'll have like a target, for example, of 215, and your initial stop loss will be below the most recent low here. So that's where it will start. But as the trade matures, as the stock moves higher, once again, we'll just bring the stop loss up, stick a line on the screen, and of course, we'll just trail it up behind. And then once the price action comes down, breaks the 20 moving average and breaks that, then of course that's the trade over. But that's how you make the money. So you're not in loss all the time. You're taking less losses. And of course, if the stock just keeps going and going and going, like Robinhood, like Palantir, all of these different stocks that have kind of flown up quite well in the last couple of years, then your stop loss will be in a very, very comfortable position, just tucked behind the 20 moving average. In fact, let's look at Palantir, why not, as an example. One final example here. Let's get rid of these lines that are on the screen from previous videos and live streams and stuff like that. So for example, if you got in the trade here, so we've drawn a trend line all the way down, what we've had is a breakout, come back down and retested, and of course the stock has moved up nicely. So you would have had an entry probably on the retest, which is there, and probably an initial target price of around 124, and your stop loss would have been nice and tight here, 6% loss around there. But over time, we would have the stop loss coming up, and of course you would have taken some profits at this target price, but beyond that is all bonus. And then we'll have the stop loss on the screen in the representation of a line. Not too sure what my body just made that noise. And you just float up behind, and you can see, depending on how tight you have your stop loss, obviously it's up to you. You could actually trail it behind the 50 moving average at a certain point, especially when a move is being made like this. But if you have it super tight, then this would have been triggered out and you would have missed out on all these gains. So there is a bit of a balance to be had, and it's down to your risk appetite. You could also have it as like a 1 or 2% behind the 20 moving average, or 5 to 10%. Again, it's depending on your risk appetite. But at this point, for example, from the initial trade, you're already up 34%. So you could, trail it really nicely behind the 20 moving average, like a 5-10% below the moving average, and then you'd still be well off now, behind the 20 moving average. So it would currently be around about here, I would say. And you'll be very, very comfortable in this position, because you would be up 78%, which is incredible. So that's another example around kind of how to manage the trade with the stop loss and the 20 moving average. That's it for this video. Thank you very much for watching. If you have any questions regarding this or anything else, make sure you drop them in the comments below, or of course hit me up on Twitter/X, whatever it's called now. I really do appreciate you watching. Go check out my channel, subscribe, etc. Not going to waffle on that too much. And there's another video on the screen now for you to watch around trading, and I'll see you in the next video. Take care and trade safe.